There's been a very clear trend of the market feeling good about softer US economic data as it'll keep the Fed leaning towards a more investor friendly monetary policy path. This trend has been behind a lot of the risk on flow we've been seeing in financial markets that has resulted in a broad currency move higher against the US dollar and US equities trading back into record high territory. And yet, there is also that risk out there that the market doesn't want to think about, which is the risk that US economic data is just too soft, that it ruins the whole vibe of the market wanting to push higher on the bad news. Some bad news is great for investors as it means things are more or less okay, but not okay enough to give investors the headache associated with higher rates. But a lot of bad news kind of ruins the party and gets us to a place where bad news equals bad news and the risk on reaction is no longer. This is how it feels a little bit into Wednesday after the market took in another round of softer US data, this time highlighted by US JOLTS job openings. We're now about to head into an economic calendar that heats up into the end of the week, which could determine the next big move in markets. We have some important data out today, and then we have some bigger event risk from tomorrow's ECB decision and Friday's US monthly employment report. Looking ahead to the remainder of the day, today, key standouts on the calendar come from Eurozone German and UK services and composite. PMI reads Eurozone producer prices, US ADP employment, Canada PMIs, the Bank of Canada policy decision, and US ISM services PMIs. That's all for now.